Good morning, team. Please make sure you read the disclosure before we get started. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Just going to jump onto the charts right now. So we're looking at US oil today. We did have some high impact news drop at 10:30. So we're looking for a sell. We have a sell model. We do have an upside expansion model. Since we're still ahead of the spotlight strategy formation here, we're specifically looking for a sell from this area. Right back into the blue zone. Let's drop down to the 5M. So our blue zone is actually, I believe, right here. Just waiting for it. There you go. So again, we had a sell model. We had a break to the downside of the manipulation first. Remember, our bias doesn't change. So as soon as we manipulate in the direction of our bias, we just wait for that retracement back to the key zones, either purple, blue, and then we look for a sell. Now it could retrace as high as this blue, so we're going to wait to see if we get a 5M bearish fair value gap first. Most likely just from the area that it's in. Just going to take a fib. Actually, sorry, we already did over here. Just looking for that. There's our end dog as well. As mentioned, this blue zone and these purple zones are highly algorithmic zones that the market is drawn to and pushes from. So if we have a sell model, we wait for it to come all the way back, reject, and push. If we have a buy model, we have a blue zone above. We either hit it or we come back to it, reject it, and then look for that buy. We're red across the board. We're only green on the 1M. Deep, deep retracement. My goal again is to see a bearish fair value gap on the 5M to give us that entry to go short right into this zone right here, which is more than our 1 to 3 risk to reward. And our goal is to do that in the next about 25 minutes before the spotlight strategy is complete, because once that's complete, we officially switch over to that. But as simple as that, that's as easy as the blue zone strategy. I can make it for you. It's literally analyze whether or not you have a buy model or sell model. Here we have a sell model. Which way did we manipulate? That was the manipulation move. Now again, when you manipulate, you're going back to the blue zone. I've said it before, I don't take that move back to the blue zone. I do not take this buy when we're in a sell model and we're bearish. We do have, the only other confluence that is off is we do have an upside expansion model with the spotlight strategy. But all that means is we could get a deep retracement and even break the top before dropping. But we are also sitting inside of a 4-hour fair value gap. This big fair value gap right here is a 4-hour fair value gap. And we have hit the midpoint of that 4-hour fair value gap as well. So just be cognizant of where your higher time frame fair value gaps are with this strategy. The daily, the 4-hour. So it looks like we're getting some rejection now of the blue zone. But as mentioned, I want to see a bearish fair value gap be created. This has to look easy, has to look obvious. Otherwise, it could just keep going up and up. There's the strongest blue zone. Remember I told you the darker the color of the blue zone, the stronger it is. That is the strongest blue zone. So cut through this one, cut through this purple zone. Now it's drawn to this one. But let's see if it gets up there. We're right in the golden zone, 88%, 61, even higher. Another telltale sign that this actually wants to push down and not up is when you see a surge like this. Look, here's a fair value gap. That's a breakaway gap. Here's a fair value gap, almost created. There's no entries. This thing is just surging up. When it's surging, it doesn't want you to get in. It's just using this as a retracement and as a secondary manipulation move. So we manipulated down, again, back to the blue, took out these highs, and now we're looking for a sell from either this blue zone, which it most likely will tap, or just around from this purple zone. And if it doesn't, if it just keeps driving up, we didn't miss out on anything because we were always just looking for a sell anyways. If we can get that bearish fair value gap up here, I'd like to ride it right into here because this is a safe zone. If it's a sell, we know we're going to come back and fill in at least this fair value gap. There you go. Hit that blue zone. Not a coincidence. Now, if it pushes past this blue zone and just keeps going, we're not interested anyways. Until the spotlight strategy is finished. And then if we get a bearish confirmation there, we'll move over to that strategy at 10:30 Eastern Standard. That's why we wait. No entry here, right? So you're patient. There's no red bearish fair value gap created. Still driving. We've taken out London highs now. So now we're in reversal territory. Remember, we're still in this 4-hour fair value gap. Since we've blown past the optimal entry there, the golden zone, and we've taken out London highs, now I'm going to be patient and I want to see a rejection off of this zone. And same thing, I want to see some displacement to the downside. So 14 seconds left. The bigger the wick, the better. You want this to just wick down. But again, if it keeps pushing past this zone, I'm no longer interested in a sell, and I'll wait for this the spotlight strategy to be complete and look for a confirmation. Right now we have a green box and a new blue zone that just got created. Remember, this is a dynamic indicator, real-time indicator that creates new blue zones as the market continues up. So it could technically just take this fair value gap that's being created here and ride that into this zone and then keep going, but I'll just wait. Today is also Thursday, and keep in mind on Thursdays with the spotlight strategy, we are drawn back to the weekly range, which is the aqua line. So there's the top of the weekly range. The bottom of the weekly range, I believe we're probably in it. It's get a little hard to see sometimes when you have two strategies on top of each other, two indicators. So there's the bottom of the weekly range. We've already tapped it. Tap the bottom, and there's the top. Aqua and aqua. So Thursdays, the footprint of Thursday is to be drawn back to that weekly range. Now we're green on the 5M as well. About 14 minutes left. If we don't see any kind of entry set up in the next 14 minutes, I'm just going to wait for the spotlight strategy, confirmation, retracement, extension. Nothing as of interest yet. "12 minutes left before the spotlight strategy is fully formed." So the longer it stays in this zone and doesn't give us a bearish fair value gap, I'm just going to wait for the spotlight strategy. We do have a bit of a mixed bag now. Again, we are sitting in a higher time frame fair value gap, so we want to proceed with caution. So once you take out the highs, we're officially in reversal territory. We're above all our zones. This new zone that got created, it's actually blotting out there's the dark blue zone that's in it. So that's still there. Zoom in, you can see it. That's the stronger zone. And there just happens to be a fair value gap that got created on top of it. So this is where they're going to start engineering new liquidity. There are going to be people that go long from here, and then they're going to create most likely a bearish fair value gap where people go short from there. Again, US oil that we're looking at. Usually on any other given day, we're looking at multiple assets, and we have alerts set up across multiple assets. Because of FOMC, because this week just has high impact news drivers, we're very limited to what asset we're trading. Excuse me. Eight minutes left. So we're too close to the spotlight strategy now. So I'm just going to wait for a confirmation retracement extension now. We've had a crossover here on the 5M. So the market could draw all the way back down here. We have a purple zone, but then it could just push from here. So there's only 2 more candles left before this spotlight strategy is fully formed. So I'm just going to hold off, see which way we get that confirmation. And you got to be adaptable. Even to somebody like me, who's been trading this strategy for a very long time. If the waters get muddy and it looks like your probabilities have dropped from 70% down, and that's officially gambling. I've said it a million times, this has to look obvious. If it doesn't look obvious, then there's too much manipulation happening. I did not expect it to take out these highs, and at the same time we're sitting in this big fair value gap. If you check the 15M, we have one big blue zone on the 15M. Again, no entry. One more candle left for range formation. Still no bearish fair value gap created. But again, they're going to start engineering liquidity off of this fair value gap. People going long, and then they might create a fair value gap off of it, where people will be going short. So we're just going to wait for that confirmation. If anything else, I think we'll get a retracement all the way back to this blue zone, purple zone, 20 EMA, and then a bounce right into this. You want to proceed with caution now. Three minutes for our range formation. We are bouncing off that blue zone, the stronger one. But we left a lot of fair value gaps in our wake, and we have a crossover down here. So till I get closer to that 20 EMA, I'm not interested in picking a direction. Remember, day trading isn't everyday trading. If you don't see the setup or it doesn't look obvious or looks too risky, avoid it. We've had a pretty good week. Monday we weren't live, but there was a trade that was taken on Monday that we did go over. Successful trade. Tuesday, successful trade. Yesterday, successful trade. So those two were live. Tuesday and Wednesday we did live trades. We're only looking for one successful trade setup every week at a risk to reward of 1 to 3 to get your 12% a month. That's the goal. No point in being greedy, especially with a week like this, FOMC week. Just be lucky that you get a successful trade setup at all. So 30 seconds left here for a range to be fully formed. Okay, so our range is fully formed. We're just waiting for a confirmation now. That's how quickly your bias can change though. Now I'm concentrating specifically on the spotlight strategy. So if we remove, I'm going to keep the blue zone strategy up just to show you guys. We have an upside expansion model where we took out Asia lows and London lows. Green box, we're green on the 1 and the 5, not quite on the 15. We're still sitting in that 4-hour fair value gap, and there's our weekly range. There's that aqua line here, and aqua line there. We've already hit it, so it could bounce off of it, or we could go all the way and hit the other side of it. But we want to see that confirmation, retracement, back to the 20, and an extension. So the blue zone didn't give us anything this morning. We were just looking for a sell, and it just kept going all the way through. And I've answered this question before because people ask, couldn't you have taken that buy into the blue zone? It's not worth it. Because we have a sell model. When you have a sell model, it doesn't have to come all the way back to the blue zone. That's just where we're looking for a sell. That's our most highest probability area for a sell, a rejection, a 5M fair value gap, hit a fair value gap, create a fair value gap, enter. And then you take that short. Excuse me. But it could just turn around here. Could be a short retracement. Anything under 30% is considered a shallow retracement. Anything under 40% technically is considered a shallow retracement. So it could just do a shallow retracement and keep dropping. So if you got into a buy and you're waiting for it to come all the way to the blue zone, it might not happen for you. But when you see that gesticulation off the blue zone, and look for that sell. Right now we're on the other side of that strong blue zone, which is running under this one. You can still see it. So if we get a bullish confirmation, I don't want to see it drop lower than this blue zone. So let's see if that 20 EMA can make it all the way up here, because we do have a lot of fair value gaps that are left in its wake. So now let's just take the fib from range low to range high. And currently 61%, 50%, that's where the 20 EMA is sitting. We're pretty close to the confirmation zone. Let's see if we get an early retracement or if we get that confirmation first. Ideally, we want to see a confirmation, bullish confirmation, give the 20 EMA some time to get up here into the purple and the blue zone. Another reason I'm not interested in a sell now is because of all the high resistance zones in between price and our entry. We got two blue zones there, a purple zone. We got the end dog, the new day opening gap, another blue zone, a purple zone, and a purple zone. And then all the way down here is our NYC opening fair value gap. So it makes more sense for it to continue, pop into one of these and continue up, then cut through all of these and become a sell model again. So I'd rather get that bullish confirmation first and then a retracement into this area and then an extension. But just got to stay patient. We can take a look at, I have had no other alerts go off for any foreign assets. Let's take a look at NAS. Get rid of all these additional drawings. We're close to getting a bullish confirmation here. So with NAS, we had something similar. It was originally an upside expansion model. Took out all the lows, bounced off the purple zone to blue zone. Again, not a coincidence. But we had a sell model. Manipulated down first. Yeah, that was the bottom of the manipulation zone right here. So we've manipulated down first, left this fair value gap open, ran until it hit this fair value gap, and then same thing, rejected off the, or sorry, bounced off the blue and then cut through the blue. The only difference here is we have not taken London highs yet. Have not taken any London highs, but we also haven't set up any bearish fair value gaps either. So this could just confirm. The weekly range is under us though. So there's the top of the weekly range. There's the bottom of the weekly range. So even more of a mixed bag. And that's why we avoid certain assets on days like this. Oil getting ready to give us our confirmation, 1 minute left. Then I want to see a drop into this, sweep out this low, bounce off possibly the purple zone, blue zone, wick down here, and then continue up. That's the goal. We've also had a double break, which is another thing that's actually helps. So with the blue zone strategy, when you get a double break in the direction of a manipulation move, so we manipulated down, we didn't get a double break here, which meant that the market wanted to move up, came up, there was the top of the manipulation zone, right here, this green line. And now we've broken twice, meaning we had a pullback and then another extension to take out the previous high. So a higher high was formed. That means there's a double break in the direction of this manipulation to the upside. And there's our confirmation. Now I want to see a retracement, and I want to see the market cut right through. We're officially green on the 1, the 5, and the 15. The goal of both of these strategies is capital preservation first and foremost. It never gave us a sell. We were only looking for a sell from the blue zone. So then we move on. We broke the blue zone. Now the spotlight strategy. As soon as you get that confirmation, there's an 80% chance that the bottom of this will not get broken. And there's a 85% chance that we're going to retrace back into the range itself, the dealing range. There's the top of the dealing range. So it's right here. Let me get rid of this. I'm going to keep. Let's make it a little bit more invisible. So there's the top of our dealing range right there, that gray line. There's an 85% chance that we're going to retrace back into this zone. There's our 1 standard deviation there. Obviously, we have to get a good entry now. I want to see it touch that 20 EMA. We have not touched it since we did the crossover. So the crossover was here. We left all these fair value gaps in our wake. So I want to see a decent retracement, most likely to the blue zone, wick the purple zone, and then that gives us actually more than enough room to take that trade. If we get in somewhere here, then obviously our stop loss will be off the wick that it leaves. To that aqua line. 0.05 standard deviations is where our weekly range is sitting. Usually we aim for 1 standard deviation, but today that becomes our low-hanging fruit. I'd like to see the market pull back before it hits this because we have such a big box. It's a pretty big dealing range today. Still waiting. Again, I do not want to see it hit the weekly range before our retracement. I want to pull back. It's giving the 20 EMA enough time to get right into the blue zone. This is my area of interest, the blue zone. We have a dark blue zone running under there. That gives us a return of 1 to 6.34 if we can get in here. Now the more it moves up, the more it actually extends our Fibonacci range as well. So we just got a confirmation, bullish confirmation from NAS as well. Again, not an asset we're interested in trading today, but we just have it up just to show you. So we bounced off the purple zone back to the blue zone. We were looking for a sell, didn't give us a sell. This is the beauty of this strategy. It didn't even, since we were originally bearish before going into the spotlight strategy, it didn't give us a foothold. So we wouldn't have, it didn't trick us, it didn't trap us. Both these strategies are designed to prevent, nothing can stop the market from doing what it's going to do, but it gives you the best probabilities of avoiding a trap. Whereas most people would have jumped in, we're waiting for a 5M bearish fair value gap as a foothold. It never gave us one, just kept driving up. Now we have a bullish confirmation. Now we're not interested anymore. Same thing with oil. We were bearish. Now suddenly we're bullish. Look at that. We're green on the 1, the 30, the 15, the 5, and the 1. 1 hour and the 1 minute. Now I just want to see a retracement back to this zone. Maybe even deeper. It might bounce off. It could go as deep as this zone, by the way. That's why we're going to wait for that retracement and then another bullish fair value gap setup to go long. First, I want to see that displacement down. And again, if it keeps running without us, then that's fine too. We've already had 3 successful trade setups this week. More than enough. Each one of those was a 1 to, almost all of them were a 1 to 3. We had 2 1 to 3s, and I believe a 2 point something. Either way, it's 9%. Risking 1% to make 9%. Or rather, risking 3% to make 9% this week. We do have a bullish market in general. Stocks are moving. So this is what we want to see. We do want to see the market start pulling back from here. I don't want to see it keep pushing up. So let's hope it stalls here and then drops into our zone. So as long as it gives us that retracement in the next 30 minutes, we're good. Deeper the retracement, the better it actually is, because we can ride that all the way into the 0.05, right into that aqua line. If it hits this without us, then sadly that is what it is. We came above the blue zone, came back to the blue zone, tapped it, and then pushed up. But I'd like to see it come all the way down, take out this low, tap that 20, then push back up. Let's see what kind of day it's going to be. Is it going to give us that entry, or is it just going to keep going without us? But that's the only thing I'm interested in today. US oil, buy from this area or this area, depending on where we get that rejection. Not interested in anything else today. But you got to be willing to be flexible. Your bias has to change with market structure. We were bearish. The market just zipped right past all of our zones. Spotlight strategy, bullish confirmation, green across the board. Now we're bullish. And we didn't take any trades. So this candle did close above that range, above the 4-hour fair value gap. Isn't the best sign for a retracement, but again, all we can do is hope to get this retracement. If we don't get it, that's fine as well. Sometimes the best trade is the one you don't take. I've said that a million times. And since we're already up this week, for anybody who was trading with us live, we had a successful trade yesterday, live. We had a successful trade Tuesday, live. And there was a successful trade on Monday using the strategy. And that was just across the assets we were looking at. There were multiple confirmations across many assets. I always say pick one of each. Have an indice you're looking at. Study it, know its patterns, the way it breathes. Have a foreign pair, like a GBP JPY, which is the Great British Pound against the Japanese yen. And then, have a couple of Forex pairs, Bitcoin, gold, whatever. That way you're insured to catch some kind of a trade setup. You don't have to catch them all. So US oil, again, the only asset I'm interested in trading today. The only thing I'm interested in looking for a buy right here. From here, or even down here, where the 50 is sitting. That's going to take a couple of displacement candles to get down here. Look at the size of that fair value gap. We've left many breakaway gaps. Just patiently waiting. Looks like it's starting to push down now. Remember, you have 20 years of data on your side with a spotlight strategy. One of the most heavily back-tested strategies out there. 20 years of aggregate on the spotlight dashboard. So our 20 EMA now are right inside that strong blue zone that's inside of this blue zone. A blue zone within a blue zone. It does get a little annoying because you can't visually see it, so it's right there. But this is my area of interest right now. About 4 minutes to 11. Still just consolidating right up here. Given the 20 EMA more time to move up. I'm still more interested in the 50 today, just because we left a lot of breakaway gaps. I almost think it wants to push past the 20 or maybe bounce off the 20 and then get down to the 50, because the 50 could be making its way up into this purple zone and blue zone. Let's see. Still looking for the same pattern though. You want to create a a bullish fair value gap once we bounce off of it, and then tap that and create another bullish fair value gap on a lower time frame. Just patiently waiting. Still just consolidating, still just waiting. Makes things easier though when you've narrowed it down to one zone, one asset, and one time frame. So we got 30 minutes for US oil to get down into this area. And if it doesn't happen, that's it. Just move on with our day. Not looking at any other asset today. We did get that confirmation from NAS. It's pulling back into the blue zone, the 20, but not looking at NAS today. Avoiding all US related assets. Looks like oil's pushing up, which is fine. This is the only area I was interested in. After that confirmation, we have not actually retraced back into the zone. Remember, there's an 85% chance that we're going to retrace between here and here. We didn't even get that. That means one of two things. Either it's going to do it before hitting 0.5, or it's extremely, extremely bullish and it just wants to keep pushing. Either way, we're protected because we're moving with caution. The more it moves up, the more it drags the fib with it. Now our 61% is right there, near that purple zone and near that 50. Just waiting. Oil still driving. I want to see a retracement before it hits this zone. If it hits this zone, I'll just pass on today. Even if we get a deeper retracement, because then that retracement could keep going further and further, and we don't know where it's going to bounce. So let's just wait and watch. Looks like it might just continue to drive. Let's see. 20 minutes left. Looks like we might just drive up there without a proper pullback. But again, does not concern us if we don't get in. Let's see where the next couple of candles go. We're very close to the 0.05 standard deviation on the weekly range. Remember, the market is drawn up into the weekly range on Thursdays. There's the bottom of the range, there's the top of the range. Didn't give us a good foothold anywhere. We wanted a foothold inside our dealing range. Instead, it used this fair value gap, tapped it, started pushing, which means it's extremely, extremely bullish, which makes, look at this, all these breakaway gaps. This is a runaway market. Never chase a runaway market. Wait for it to come back to you. If it doesn't come back, that's fine. Still got some time. Let's see. So we've already tapped it. We already hit 0.5 standard deviation and our weekly range, and we just wicked off of it. So that's going to be our time for today. I'm no longer interested in another deeper trace. Maybe we could just retrace back and gesticulate back and forth and not extend at all, or it could just keep going from here. So there's no point in just wasting your time watching a market that might not give you exactly what you want. So we'll conclude there. We'll be live again next week, Tuesday. This weekend, make sure you do your due diligence, some homework. Make sure you back test the strategy across all the assets that you're currently watching. Make sure you check out the blog and the news section in the footer of fractaleffects.com. We're bringing you a lot of information from analysts. These are industry professionals and their take and their quotes. Other than that, please hit the subscribe button, turn on your notifications so you know when we're live. Follow us on Instagram, fractal.effects, and we'll see you